on banking sector. I, Sister Cecilia Carvalho, Assistant Professor, Department of Commerce, All Saints College, and I have been given an honor of welcoming our resource person for the second session of the day, Dr. Saju S., Assistant Professor and Head of the Department of Commerce, SN College, Varkala. His session is titled, How to Rebuild Bank for a New Normal. Dr. Sajo has donned many a cape in the academic arena. He was previously the head of the Department of the PG and Research Department of Commerce, SN College, Chemrati. He was also the members, Board of Studies in Management, University of Kerala and External Export, BVOC, Kannur University, to list a few. A busy research guide, he is abreast of the latest development in this field, and therefore it will benefit us immensely as he takes us down to the road of rebuilding bank after the COVID fiasco. Something that must be thought about during these times. As we know, the pandemic is not just a health concern. It does spill over into the social and economic domain. Dr. Soju is not a stranger to us. He is a part of All Saints family, and that too quite literally. He is also the better half of my colleague, Mrs. Sangeeta S., who is also the joint coordinator of the seminar. So we are here with someone who is very much in a commerce family. Welcome, Dr. Soju. We are delighted to have you today.
Participants, kindly turn off your audio and video.
Good morning, all. Thank you, sister. Very good morning to all. Respected Principal, Dr. Deepa Ma'am, respected Head of the Department, Dr. Srilekha Nair, other faculty members in the Department of Commerce, All Saints College, my colleagues from various colleges in and around Kerala, respected resource person for the first technical session, and my dear students. Today we all gathered here for a very serious academic session which clearly deals with the impact of COVID-19 on the banking sector around the world. It is an international seminar, and I think we need to handle the impact of COVID-19 on the banking sector around the world. And obviously, we should concentrate more on the Indian banking scenario because majority of the participants, including myself, is living in India. So we need to concentrate much on the Indian scenario or the Indian banking sector. Let us start with the title. The title for my presentation is How to Rebuild Banks for the New Normal. From the title itself, it is known to all that we are not going to the old normal. That means nothing can be recovered from the past after some time. So that is the meaning of a new normal. So adaptability from the part of everyone, every individual around the world is needed to be part of the new normal. Similarly, all sectors in the economy, banking sector is not an exception, including the banking sector has to adapt to the new normal situation all over the world. See, that is the current situation. See, we all know that Uh, the COVID-19 made the world in a standstill position. It affected both the social life of human being as well as the economic system of the well-built economic system around the world. So on the one side, it is affected the social life. On the other side, the economic system has been destructed. See, it is the destruction. When you measure the destruction, it is not the right time to measure the destruction in the correct sense because the pandemic is still prevailing. So it is tough time to assess the impact of this COVID-19 pandemic at this moment. Anyway, we need to address the issue because we need to adapt to the situation very fastly for the new normal. And that is why we are discussing on this topic, that is how to rebuild banks for the new normal. So with this introduction, I'm straight away going to current macroeconomic situation around the world. I told you much research has not been conducted on measuring the impact of COVID-19 on any sector because it is highly premature to conduct a research at this time. However, HSBC has conducted a research in this area, that is the impact of COVID-19 on various sectors. They have conducted a survey around 2,600 businesses across 14 countries and covering a variety of a handful of sectors. And they found that 5% of the total businesses ceased their operations since the COVID-19 pandemic started in December 2019. See, this is an alarming situation. See, just imagine while they conducted a survey, they included 2,600 business units as sample, and found that out of this 2,600 businesses, 5% of the businesses ceased their operations all over the world. See, I told you this is an alarming situation. See, the pandemic has affected all the sectors, all banking sector, everywhere, every sector has been affected. See, the remaining or the existing business entities around the world, they have diversified their activities. See, they compelled it to diversify their activities because of two reasons. The first one is this pandemic emerged in the world very quickly and it spread across the globe without any delay. It affected all the countries across the globe. So it was the tough time for all the business entities to retain their employees. See, everybody is optimistic and every business believes that this pandemic will, or the evil effects of pandemic will end soon and they can start the business operations as early. So every business entity need to retain their employees. So all over the world, every business entities tried to retain their employees, but with the existing business, it is not possible, and that is why they diversified their business activities. And the second reason for the diversified activities of business is that all the business entities, they tried to fight against the pandemic. It was demanded by the society. See, for example, you may be aware that majority of the automobile companies in the world started to manufacture ventilators. Why? Because almost all the companies, all the big companies realized that it is their responsibility, it is their social responsibility to fight against the COVID pandemic, and that is why they tried to manufacture. Even in India, the Maruti Suzuki Limited started manufacturing ventilators. So in this way, the companies are trying to exist or trying to resume its operations during the pandemic. Then, however, uh, when we analyze the business as a whole, we can see that all business entities, irrespective of the size, irrespective of the nature, all struggling to plan even the near future. Even a small vendor does not know what will happen tomorrow, whether he can open his shop tomorrow or not. It is uncertain. All on a sudden, there will be a lockdown. All on a sudden, there will be interference from the health authorities. So, even the business cannot plan even the near future. See, that is the situation prevailing right now around the world. Then, see, I told you the serious alarming situation of the pandemic, the pandemic era. And now we should analyze who is actually sustaining during the pandemic period. Uh, Obviously, agriculture sector is the only sector prevailing or they survived this or surviving this pandemic period. We know the reason because without food, human being cannot survive. So food is a necessity for everyone. So agriculture sector supports the human being. So every country, every village is trying to engage with agricultural activities. We know that in Kerala, we are a consumer state. Our administrators also, political leaders, administrators, everybody is constantly or consciously saying that everybody should be engaged with agriculture because in the near future we will see another crisis, that is the food crisis. So all over the world, the situation is the same. Agriculture sector is flourishing. Agriculture sector is surviving the pandemic. Then, during the initial stages of the pandemic, the online delivery companies and gadgets industries survived. You know that majority of the countries declared lockdown in their country, and as such, there was no other option other than online deliveries. So this benefited the online companies to earn profit or to survive. I'm not using the word profit because at this time, during the period of this pandemic, there is no uh, such word profit. Nobody can earn profit during this period because generally there is a saying in the business that every worst situation should be considered as an opportunity, but during this period we cannot consider it or any business cannot consider COVID-19 as an opportunity because the human beings as a whole is struggling to survive. Then gadgets industry, irrespective of age, irrespective of income level, nowadays everybody is using gadgets. We are all using gadgets. Even the children, nursery children, they are using gadgets. So initially the gadgets industry sustained, but we should remember that they can survive or they can overcome the current situation only in the short term. In the long run, these two industries or these two areas or these two sectors like online delivery companies and gadgets industry will be affected in the long run because the macroeconomic factors are not good as far as the situation is concerned. So these industries will also struggle to survive in the future. Then there arises another crucial question, that is, which is the most trustworthy business model? So there are different business models in our economy. We know that large businesses are done by corporates or company form of entities. Then medium and small scale industries, small scale businesses are carried out in the form of MSMEs, partnership firms, then sole proprietors, all are there. So here the question is, which one is the most trustworthy business model? See, we cannot say that corporate world is trustworthy, or we can't say that they will survive or they will overcome successfully after this pandemic, because The investors, we all know that the investors all over the world, they will find new priorities in the new normal. If more profitable businesses are emerging, after some times they will go for uh, investing in such business. So it is not sure whether the corporates will survive. We cannot trust entirely the corporate world. Then micro, small and medium enterprises, they are the damages which the COVID-19 has made on this sector is very severe. Majority of these MSMEs are struggling to survive. Majority of these MSMEs are startups as far as India is concerned. So they are struggling to survive. So that is a fact. Then comes sole partnerships and sole proprietorship form of organizations. See, these type of organizations are actually in a dilemma. You can see these type of organizations around you, even in lockdown. Small vendors, kirana shopkeepers. See, all these they are struggling and they are in a dilemma. They don't know how to deal with their loan repayment, how to pay the next month's rent. Then how do they how do they can retain their employees in their business? See, all everywhere there is an uncertainty as far as partnerships and sole proprietorship organizations are concerned. See, that is another important thing. So here, what I'm saying is corporate entities, micro, small, and medium enterprises, whether it is company form of organization or partnership form or sole proprietors, all profit-making entities are in a severe crisis during the period of this pandemic. So that is my point. Then, I made a deep analysis on various business models, and I found that the cooperative societies across political boundaries are showing their potential to survive in this pandemic situation. See, all of you may be aware that cooperative entities are not meant for profit making. They are working on the principles of cooperation. The cooperative principles are entirely different from other business entities' principles. See, in all other forms of business entities, wealth maximization of its owners will be the priority, will be the prime objective. But as far as cooperative societies are concerned, mutual health will be the key priority. See, during the period of this pandemic, uh, you see some of the activities done by the cooperative institutions around the world. See, in India, the Gujarat State Women's HEWA Cooperative Federation Limited has adopted a threefold strategy to safeguard its members. Uh, Apart from their main operations, they concentrated on these three areas. They provided health kit to its members. Then they tried to provide direct cash transfer to its members so that they can find their livelihood. Then ensure food security during the lockdown. See, I collected this data from International Labour Organization. See, here, this cooperative institution has reacted to the pandemic with some social commitment. They try to look into the well-being of the members. See, this happened in India, in Gujarat. See, when you consider other cooperatives around the world, you can see that cooperative banks, today we are dealing with the banking institutions, and you see the cooperative banks in Paris extended credit to hospitals and healthcare centers amounting to around 100 million euro. So this cannot be viewed as a less or a minor effort by a cooperative bank. You may also be aware that even in Kerala, many of the cooperative societies, credit cooperative societies, are offering financial assistance or financial support to the government. They are donating to the CMDR, the Chief Minister's Fund. We all know that. Then, see, this happened in Paris. Again, the retail cooperatives in Italy, see, they are retail cooperatives. They are, if somebody, this mic is on, please mute the mic. Thank you. So the retail cooperatives in Italy showed a revenue increase during the pandemic period. Naturally, it was because of the high demand in groceries and all. And they donated millions of. Hello. Okay, I think you can hear me. Vichita Gita, please mute your mic. Okay, thank you. Yes, the retail cooperatives in Italy showed a revenue increase during the pandemic period, and they decided to donate millions of euros to the public hospitals and community cooperatives, which are directly dealing with the COVID. They are supporting the local people to overcome the vulnerabilities of this pandemic. So this reveals that the cooperatives are survived and they are even supporting the society with their surplus amount. See, now you may ask a question that what is the reason for the cooperatives survival? See, these are the reasons for their cool presence in the economy with confidence. So this is not a new thing as far as the cooperatives are concerned. See, when you analyze the global financial crisis of 2008, there also you can see that majority of the credit cooperative banks in Canada, in America, and in Europe, they survived. The reason is, see, the cooperative principles upon which they are incorporated is one reason. See, they are working on the principles of democratic management. They are working on the principle of all for one and one for all concept. Then principle of autonomy and independence. Then mutual help strategy rather than usual business concept of wealth maximization of members. See, it is to be noted that because of their deep-rooted structural strength, they have concentrated more on the social well-being of the society in which they work during the period of pandemic. See, I told this example, I included this aspect in my presentation. That is, which type of business, which business model has survived during the pandemic. Because we need to learn, or the business world has to learn a lot from these cooperative institutions, especially the cooperative banks. We can discuss it later. Now, we are moving to the specific area of our discussion, that is rebuilding the banking sector in the new norm. So, we always says that there will be a new normal. There is no coming back to the old normal. See, during the pandemic, what was the response of the banking sector? When you examine the banking sector's response, you can see certain factors. See, since December 2019, when the pandemic was first reported from China, banking sector around the world showed its strength of adaptability to the emerging situation. See, that means all the banks around the world responded very quickly. The banking regulators also responded very quickly. And many policy announcements were made by the central banks around the world. Even in India, RBI has announced many regulatory measures, many supervisory norms. They issued many supervisory norms to the banks. And To this great extent, these announcements by or these policies of the central banks help the people at large to a larger extent. Then, when we examine the operations or quick response of the banking industry, we can see or we can identify certain phenomena. See, this increased the quick response of the banking sector resulted in the increase of financial inclusion. Many people were brought into the formal banking channel. That is the positive side of the pandemic. All over the world, the financial inclusion activities were boosted up. See, there are reasons for that. See, again, so many activities have been made by the bank companies or by the regulators to increase the financial inclusion process. Sorry. See, certain policy measures announced by regulators during the period of pandemic is given in the table number one. You see, these are the major countries. Financial inclusion level in 2007 is given in the second column. Then the policy measures announced by the regulators. See, the major policy measures boosted up the financial inclusion process is decline cash in, cash out as essential service, then reduction or removal of fees, then relaxation of knowing custom procedures, and increase the transactions. See, these measures definitely boost the financial inclusion process. In Egypt, in 2017, the financial inclusion level was 32.8 percentage. We can Indian case, the financial inclusion level was 79 percentage, and we declared cash in cash out as an essential service. Our regulators declared it as an essential service. So naturally, direct cash transfer from various agencies has been mooted in India, so that it was a necessity from the part of the banks to declare cash in cash out facility as essential service. Similarly, you see in Pakistan, the financial inclusion rate is only 21.3 percentage, and they made they announced so many policy measures. One, declaration of cash in cash out as essential service, then reduction or removal of fees, then relaxation. All these measures have been taken. Then Kenya also. See, the in Kenya, 81.6 percentage is the financial inclusion level. Even then, they declared cash in cash out as essential service. They removed all the